Welcome to the Techno Fundamental Report for March the 14th. A man should look for what is and not for what he thinks it should be. Albert Einstein. Techno Fundamental, it's all about understanding the technical side of an investment decision, and you also want to be aware of the fundamentals of the company to make sure you're on solid ground. But you should look for what it is and not what you think it should be. It's going to be what it is. The trend is your friend, except at the end where it bends. Ed Sakota. The whole idea of long-term investing is to find that one decision stock. And they are incredibly rare. And so as a result, William O'Neill in his book discusses the myth about long-term investing and being fully invested. There are times that he discusses here, and you might want to pause your video player, but he talks about where we go into bear markets and you've just got to go to a defensive stance, and usually that means lots of cash. He says up here, most stocks fall during a bear market, but not all of them recover. So the problem here is with buy and hold is that if you happen to have a bad situation, you've got to take defensive action. So I gave you an example here. I can remember back in 2012, I bought my first Tesla. I bought my first electric car. Really wasn't that pleased with it. Actually sold it very quickly. This is Fisker. This is a small electric car manufacturer. And I actually had a family member contact me and ask me about it and said they had bought it and that they were going to hold it forever, that it was a buy and hold, and that was the case. Well, anyway, this stock has dropped from $28 all the way down to 17 cents. They're going bust. They're going bankrupt. That's, I've never seen a company go bankrupt when their stock price was in an uptrend, but this is a severe downtrend. And so we made the decision back in 2020, 2021 to get out of the electric car concept because it really kind of is starting to look iffy. Tesla last year cut prices on their automobiles, which is a very competitive industry. I mean, incredibly competitive. But they cut prices, and an analyst came out yesterday and put a sell on the stock because he basically is saying that even though they're cutting prices, volume of sales is deteriorating. So buy and hold sometimes, but very rare. Now also, Ray Dalio came out recently and talked about his market bubble gauge, which I think is interesting. And he is saying that basically right now, based on his gauge, he's at the 52nd percentile, which is not a bubble. So we don't think this market's in a bubble phase right now, which basically, if you really think about it, every bull market I've ever experienced usually ends with a bubble. Now, everyone's real concerned about inflation. We actually got some inflation numbers this morning that were not that good. In fact, they were higher than expected. But this is a graph of the commodity index. So in other words, we're talking, basic commodities. And you can see here, and I've got a bunch of moving averages on here, you can see that this is definitely in a downtrend. So is inflation going to continue to be a problem? This particular graph says commodity prices are coming down. Now, also home ownership. I thought this was an interesting report that was sent to me by a good friend. And it basically breaks down, home ownership by generation. And you can see here that the millennials and the Gen X's really have a long way to go because the houses that are being owned by the baby boomers will transition to Gen X and millennials. So the housing stocks are looking interesting. This is Pulte Homes. It's on our watch list. It looks interesting. The stock is in a nice uptrend, and we'll talk more about that. Now, also on what's going on with artificial intelligence. Now, the reports I'm reading are basically saying, pay attention to the infrastructure stocks. Don't get too hung up on looking for software companies and other companies that are going to benefit down the road, because down the road could be a while from now. But for now, The infrastructure stocks, which we'll look at a couple of them here, are the way to go. It's kind of like when the internet first came about in 1995, the infrastructure stock that you needed to own was Cisco Systems. But then down the road, you had a couple of companies like Netflix and Amazon and that started to benefit from the internet, but it definitely took a while. Now, the big thing we hear coming is going to be the AI PC. So it'll be basically a personal computer that's designed for artificial intelligence. Now, NVIDIA would be the one that is on everyone's mind, and it is a very interesting company that's very profitable. They've got about $30 billion in cash right now. I mean, the company is on very solid fundamental footing. It would be an infrastructure stock very similar to Cisco Systems back in 1995. Now, the other one that I would be paying attention to. Now, these are stocks that I would recommend you watch at this time. Not necessarily a buy at this moment. This is Taiwan Semiconductor. They pretty much manufacture, all the semiconductors for Apple and Microsoft and NVIDIA. So this is another infrastructure situation. Let's look at the indexes real quick. Here's the NASDAQ. Continues to be in a very nice uptrend. You can see here that, our trend meter continues to be in the green. We're above the moving averages. Now, the mid caps are showing some life. And this is important because, as the market broadens out, which we're starting to see, I think you're going to see it first in the mid caps, and then you may see it, hopefully, in the small caps. Now, the small caps have been underperforming all year, and they've been underperforming for a long time. And the problem is they've got a lot of these companies, I would say up to 70% are not profitable. There's a lot of regional banks in this index. However, as interest rates, if they do come down, could benefit this group greatly because these smaller companies do have debt, and they have to refinance. Energy's kind of starting to pick up here a little bit. We're seeing one stock, and these are just stocks in my watch list. We'll just look at 3 of them. This is Diamondback Energy. Now, here's the technical message. Nice flat base, breakout on a gap up, another gap up, and then you've got a nice ascending uptrend. Now, this is an oil and gas company out in West Texas. Now, let me show you how I've got this chart set up as we look at these others. First of all, I've got the trend gauge here. Here's the price of the stock, high, low, close. Here are some moving averages that we think are important. Now, I've added something new. Here's volume, as you can see, but I've added something new here having to do with relative strength. And I'm using a moving average on the relative strength. So, as you can see here, the relative strength line is definitely, in both cases, in uptrends. So that's how I've got this graph set up. This stock looks pretty darn positive to me. Fresh Pet, this is a small cap company. We're talking a $5 billion company. They sell high-end pet food. And I was talking to my wife about it the other day because we have 2 dogs, and she's tried the food, and the dogs didn't like it, but they're terriers, and they're just real finicky. But this is a company that announced earnings, had a nice gap up. Stock's been consolidating, and it's kind of trying to break out here a little bit. We own that stock, and we also own, we don't own Diamondback, but we do own NVIDIA. This is Samsara. This is a software company that we just recently added to the portfolio. Based on this gap up, this buy signal, now we're seeing some consolidation in here. This company is involved in software for asset inventory control, and they went public. This is a fairly new company. They went public about 2 years ago, but they're claiming to be the next blue chip, so we'll have to see. So if you have any questions, let me know. Thank you very much.